Hi guys, welcome to this Renko overview video on trends and moving into position and compounding positions in trending markets. So I've recorded this video like 4 times now, and I hope that this will be the final one. I want to basically run over what trading Renko in a trend-based approach looks like, how to position yourself properly, and then the way that I utilize building positions using Renko. That's like primarily what I want to cover in this video. So what I'm going to do is I'm going to give you an overview to the indicators that I'm using for trend trading, the way that I set myself up for positions, and then allow you to go and sort of paper trade this and explore your own charts to see where you could discover entries or exits for this process. So first of all, I'll start off by saying that this is ATR 14 Renko. If I'm using Renko for any sort of trend trades, then I'm always using ATR. I can deal with the repainting aspect because it usually doesn't affect the underlying trend. So if the trend is up, the fact that bricks repaint shouldn't affect the overall trend that I'm seeing. Next up, the timeframes that I like to use are between the 15-minute and the 4-hour. The hourly actually works particularly well in this situation, so I really like the use of the hourly here. And then next up, as you can see, I'm using the awesome oscillator as usual down the bottom, and I'm using the CM Super Guppy, which is giving me the visual that you can see on screen. What the guppy is representing is essentially it is a series of moving averages. So it ranges from very fast moving averages like the 3, the 6, the 9, the 12, through to slower moving averages where you're looking at like the 40 plus moving averages. And you can see these two splits in the colors. So we can see orange and red and blue and green. And that is just the representation of the fast moving averages, which are in blue, and the slow, which are in green. The fast moving averages in orange, the slow, which are in red. And obviously green dictates an uptrend, red dictates a downtrend. So what we're seeing here on this BTC chart is a 1-hour version of a trend in motion. So let's look at some of the ways that you can utilize these trends and the way that the guppy presents information and keeps Renko in check in order to really squeeze the most out of your positions. That's kind of what we're looking for here. We're looking to use the guppy to squeeze as much value out of a trade as possible. So let's take a look at this. Here's an example here of a divergence. Okay, we all know this divergence. It's a higher high, and the awesome oscillator is making a lower high. So we have a divergence at a really nice level, really nice peak in the awesome oscillator to show that this momentum is running out and this fresh high created. So in this situation here, what we would look to do is we always look to short a divergence. Now, because I'm not playing this as a scalp, I'm looking to do something slightly different than I would usually do with my positions here. What I'm looking to do is I'm looking to take 33% of my position here. The reason being is, although I can see this divergence, I'm still shorting into an uptrend. Okay, so I'm still shorting into what is a strong uptrend. Therefore, I'm counter trend, and I don't want to get caught out. So I don't want to start entering 100% of position here if price just continues upwards and blows straight through it. So what I'm doing is I'm looking at entering 33%. Okay, and then if price moves against me, I can reassess what I'd like to do with this smaller position size. And then what I'm looking to do is build this position size as the other confirmation factors come into play. All right. So let's take a look at the process from here. I would take a 33% entry on the presence of a divergence. So maybe it would help if I do this. On confirmation of a divergence. Okay. And that's here. So I can move that across. Okay. Next up, what I'm looking to do is once this divergence is confirmed, that's fantastic for me. Okay, and it moves down to this region here where it breaks the awesome oscillator. Okay, we get that bearish momentum come in, which produces this downswing. Now notice this downswing doesn't affect the guppy. It actually bounces from the bottom of the guppy and comes back up again. And this is why we take these 33% entries, is because the trend is still up. Now, the way that I would play this is as soon as we flip to the bearish side of the awesome oscillator here, okay, so that's in this region here, I would open another 33% of my position. Okay, so I'd open another 33% here. The reason I would do that is because I've now seen that this divergence number 1 has played out, therefore I expect this to be the high. I now expect this to be the high that I can set my stop behind. So what I can do is, I'm going to remove these divergences. I'll remove this divergence here to keep this clean. So what I'm now looking to do is make sure that my stop is somewhere above this high. Because I'm comfortable that with this divergence playing out and with the presence of bearish action in this region, I'm happy that this here would be my stop region. Okay. So I've got 66% of my overall position. I've entered 33% from the divergence, and I've entered 33% from the cross of the awesome oscillator. What happens afterwards doesn't really matter too much. Okay, we hold the trend, but I have my stop. This is my invalidation point. My trade here, is still active. I've probably got an active position size of here right now, right in the middle of this range. So actually this price isn't bothering me too much. It's just bouncing around a region that I'm probably underwater. Now I'm slightly in profit. Now I'm underwater. Now I'm slightly in profit. Okay, so we're just bouncing around, which is fine. It's comfortable. What I'm looking to do is catch the trend down. And then lastly, what I would do in this position here is I would short either this region here, and this depends on how aggressive you are. I would either short this region here, or I would short this region here. And this purely depends on how aggressive you want to be with this strategy. So I'll take my final 33% here. Okay, I'm going to leave it in the middle of these two. I don't want to put another 33% up. And the reason for that is we are shorting a loss of the guppy, or we're shorting a loss of the 200 EMA, or we're shorting a red flip of the guppy. All right. So there's basically 3 reasons that we'd want to add to a final position. And what they are is they are the final confirmations that the trend has changed. So here, what we're doing is, if you think about this in terms of making educated guesses, we are looking for a trend slowdown, which we see in the divergence. So we enter 33%. What we then see is we see the presence of the bears in this uptrend, which gives us reason to add another 33%. And then our final straw is the uptrend being lost. And it being lost depends on a number of factors, and they're all individual to you. Lost can be losing the guppy and breaking down from the guppy. That can be one aggressive entry. The second can be the loss of the 200 EMA, which dictates the overall trend. Or it could be on the red presence in the guppy. So here, once we see this red appear in the guppy, okay, we know we've entered the downtrend on the guppy. So what we end up with is a 33%, 33%, 33% position. Okay, let's round it up to a nice 100, save it getting awkward. And what we're doing is we're probably ending up with an average somewhere here. Okay, this is probably giving us our average entry is around this region here. Now what we're looking to do is we're looking to capture the movement then down to any regions. Such a perfect video, right, until that happens. And there's no way I'm re-recording, so I apologize if that scared you. It scared me just as much. But hopefully if he's quiet now, I'll carry on. So this is your average entry. Okay, here's your average entry. What we're looking at doing is riding the trend now to a point that we can safely take profit and be happy with the move that we've experienced. You can see that I've got this level marked out here. This is actually a support level for BTC. Okay, it was the bottom of this 9k range, so it was where we started to run into support before the breakdown to 8k. So actually what we can do is we can either just ride this down from our average entry all the way down to a support region and just close there and be happy with it, right? Look at this. This is a $2,000 move that we're capturing just because we're identifying several key factors and building our position in stages. We would have built our position over the course of 4 days, 5 days, and we get a $2,000 move down because of it. So that's one reason that we may want to close a position, is because we enter a support or a resistance area that is counter to the trend that we're in. So if we are in a downtrend and we hit support, that's probably a really good place to take some profit. If we're in an uptrend and we hit resistance, that's probably a really good place to take some profit, right? The other thing that we can do, and this takes a lot of discipline. Okay, my personal preference is to take the profit when I hit a major support or resistance zone. However, there is an argument that says that you can hold this until the trend completely flips back. And there are a couple of things that we look for. Firstly, we look for a challenge to the guppy. We basically are looking for the opposite of the reasons we took the trade to begin with. So we're looking for any divergences. Well, in this instance, there's no divergences, which is a really positive sign for us in a short position. So what do? We move on to look for this. Okay, is there a flip to the bullish side? Yes, there is. That's this region here. So the bullish side flipped here. Okay, so that would give us cause for concern because now the bulls are showing their face. Secondly, what happens to the guppy? Is it lost? Is the 200 EMA lost? Or have we seen a color change? And yes, we have to all of these things. So at this point here, you would absolutely want to be exiting your position because there is too much pressure against your original position up here. Now, if you have the discipline to hold this position, then obviously you could have kept this position in place from here, from this short at 11.5k, and you could have held it down to where we currently are at 8.3. Okay, so that is possible, but it requires a lot of discipline in order to do that. You could look at this and you could say, well, here's the area that I now don't want compromised. Okay, because this is the former support area, so I'd expect this to act as resistance. So you'd have your stop up here. The reason that I don't particularly advocate this approach is I think that a lot of people have trouble with taking profit, and I think a lot of people would panic about a move back up to here if this is your average entry. I think a lot of people would panic about this move and would close this region probably 75% of the time out of fear they're going to lose all of their profit if it comes back up to here. So my advice to you is think about the way you can apply this 33% rule to creating some nice trend positions. And what your aim should be is to take that down or up to significant support or resistance levels. So identify your divergences. Identify the AO cross and the presence of bulls or bears. Identify the breakdown of the existing trend and the new trend developing. And then look for a target at a major support or resistance level that you can take profit on and secure yourself a nice trade. Sure, it's great to hit this level down here at 8.3, but closing at $2,000 down and $2,000 in profit versus panic closing at $300 in profit feels a lot better. Okay. So that is a very basic overview to the way this system works. It works in 33% position sizes. It works by slowly building and analyzing a range over a period of days. And then it looks to give you that big playout, which we see in a lot of instances. We see this position deliver some really significant results. If there are any questions on this, it was a rough and ready overview, and apologies for the dog barking. If there's any questions on this, then please just shoot me a message. But take this information, take this 33% rule, take this application of the divergences, the guppy, the breakdown of the trend, and start looking back on some charts that you have and see where you could have taken advantage of this. It would be great if some of you guys could share this back with me. If you post in the Serious Charts channel and just tag me and just say look, have I applied this correctly? Would this have worked in this situation? It would be great to see some of you applying this and then sending that back to say, does this work for me here? Perfect timing once again. So I'm gonna close off the video there. I can't believe he did it just before the end, just I'm about to sign off. So apologies once again. And thank you very much for joining me on this one. I will see you all again very soon on the next video.